next, we have the Money Printers Experience, an introduction to options. Come on up, Tola and TMP. Welcome to Juneteenth, the virtual experience.
So, thank you very much for having us. We appreciate you guys. Happy Juneteenth weekend. I hope everyone is feeling amazing, abundant. I hope y'all are feeling phenomenal. So, my
Yes.
name is Dame. Um, I am one half of the Money Printers. I'm here with my billionaire brother Tola.
My
We
billionaire
want to
brother,
get
how you feeling today?
what's going on. I'm feeling amazing, my brother. How are you?
I'm feeling great, man. I'm happy that we're here. Happy
Freedom
to
travel
share with the
to
people.
create.
Um, I'm gonna get started and start sharing. All right. Share my screen. Actually, give me 1 second.
Right.
How's everybody feeling today? It's Friday. We're about to get started. We're gonna teach you guys a little bit about options. Um, Me and Dame have been trading options for about 2 years now, and we've created a nice platform for people to come, new and old, to basically showcase, like basically just grow their accounts and um, build wealth. Okay, so we feel like a lot of people in our communities, um, they're not able to build build wealth as easily as the next man, and we found a way to basically help those people build that wealth. Okay, so we made this presentation to give you guys an insight on trading options. So we're gonna get into that in a moment.
Okay. All right. So it looks like the presentation is up. We
Uh-huh.
just need to.
Okay. Is there any way I could?
Right. It looks like we may be having a little bit of difficulty right now, but we are going to get it together. So this looks to be the middle of the presentation. We're going to start this from the beginning. Tola, is that you sharing your screen?
I I want to say so, but I'm
Mhm.
not sure because I'm not. All right. Here we
Here
go.
we go.
So, welcome to the Money Printers Experience Introduction to Options Trading. I'm your co-host Tola. I'm here with my billionaire brother Dame. All right, and you can follow us. Gonna go to the next slide. You can you can follow us on Instagram. Our business page is the Money Printers TMP. You can follow Dame at DameBond TM, and you can follow me at Live Life with Tola. Okay, so who are we? The Money Printers is a movement dedicated to building generational wealth. We focus on printing money through trading options, stocks, real estate, investing, and so much more. So our ultimate goal is financial freedom for everyone in the community. So, just a disclaimer, this is not financial advice. All right, let's get started.
So, what is your why? Okay. Now, every day you wake up, you have to ask yourself, what is your why? Right? Why do you want to print money? Okay. Who wants to be a millionaire? Right? If you want to be a millionaire, let me see a show of hands. Let me see some ones. Okay. Let me see if you want to be a millionaire. Okay. And if you want to be a millionaire, you are thinking too small. Right? With the money printers, $1 million is your floor. Okay. You have no ceilings. $1 million is your floor. Right? So we can move on to the next slide.
So this is our table of contents. This is what we're going to be going over today. What is a stock? What is the stock market? What are options, calls and puts, the Greeks, strike prices, option chain, trading stocks versus trading options, trading identities, understanding your risk tolerance, different brokerages, cash versus margin account, and how to print money in options.
Okay, so what is a stock? All right, a stock is a piece of ownership in a company that investors can purchase. So when you think of companies like Apple, Amazon, Google, those are all publicly traded companies that you can take some money, you can park it in that company, okay, invest in that company. Now you essentially have a piece of ownership in that company. So as that company grows, so does your wallet, so does your account. Okay. Next slide.
So, what is the stock market? A lot of people don't know what the stock market is, but the stock market is where investors connect to buy and sell investments, most commonly stocks, which are shares of ownership in a public company. There are many exchanges and brokerages on which investors can buy and sell stock. The ultimate goal is to make money over time as the value of the company or the stock increases. So, think of companies like Apple, Microsoft, Amazon, and Google. All right, next slide.
Okay, now options are different than stocks. Okay, so what are options? Options are contracts that allow traders, you and I, to control 100 shares of stock at a time. Okay, so you don't own the stock, but you control it for a certain period of time. Right, so each option contract has an expiration. Okay, so you want to think of if you purchase an option contract, it has an expiration date. All right, and expiration dates range from same day expiration. So if you bought an options contract today, it can expire today, or you can buy some time on it and it can expire up to 2 years. Right. So continue. Next slide. Okay. So you have control over these options until you sell it or until it expires. Okay. So you can keep it the whole expiration. You can sell it before. All right. But you have control until it expires. All right. Now, the further out the expiration date, the more you pay for the contract. So think about renting a car. Okay, if you rent a car for one day, you're gonna pay a lot less than if you rent a car for a whole month. Okay, so um, the longer the expiration, the more you will pay, and that price that you pay is called a premium, right? So after you buy these contracts, you can sell them at any time for a profit or a loss. We like profit, so let's make sure that we make a lot of profit. Next slide.
Okay, so calls and puts. These are two type of option contracts that you could buy. Okay, so you have calls and puts. Think of when you call, you pick up the phone when you want to call somebody, and when you're done with that call, you put down the phone, right? So calls gives you the right to buy underlying stock at a preset price, aka the strike price in the future. And puts give you the right to sell underlying stock at the preset price, aka the strike price in the future. Okay, let's move on.
Okay, so when it comes to buying a stock option, right, when you purchase a call, that means that you believe the underlying stock price will increase, and that's going to make your contract increase. Okay, so If you purchase a call on something like Amazon, Apple, or Google, you believe that that company, right, the underlying stock will increase, and the more that price of the company increases, the more your value of your contract increases. Okay, so think on calling someone up. All right, and when you purchase a put, that means that you believe the underlying stock price. Again, Amazon, Apple, Google, you think they're gonna go down. Okay, so if they go down, your contract value increases because you have a put something down. Okay, the beautiful thing about trading options is that you can make a lot of money whether the stock price goes up or it goes down. Okay, so that's different than general stocks, buying general stocks. Okay, you can only make money when stocks go up. With stock options, you can make money whether the company goes up or down. Okay, let's move on to the next stop, please.
All right, so you got a strike price, okay? The strike price is the price you think the stock can reach by expiration. So earlier we spoke about the different expirations that you have. You can have a 0-day expiration, something that expires today. You can have something that expires in 2 weeks, a month, in a few years, okay? Now the strike price, let's say, for instance, you're trading Apple and it's trading at $100, and you buy an option contract that expires in, let's say, 2 years, but that option contract has a strike price of $105. That means that you believe that that Apple will expire at 105 or higher by the time it reaches the expiration of your contract. Okay, we're going to move on to the next slide. So strike price continued. We have in the money, at the money, and out the money contracts. Okay, so in the money is basically when, I'm going to give you the same analogy again. You have Apple is trading at 100, and let's say the strike price that you have is $100 strike price. That means that it's in the money. So let's say if it's at 105, right? Let's say Apple is now at 105, the stock. Your $100 contract is now deep in the money, or it's in the money. Okay, at the money is basically stock options that are trading around that price. So 101, 102, 103. Okay, and then you have out the money. Those are contracts that the price has not reached yet. So let's say you had $100 strike price option contract, and Apple is trading at $100, and you want it to reach 110 or 120 or 125. That is out the money because it hasn't reached yet. It's still trading at $100. So out the money is when the stock hasn't reached the price yet. In the money is when the stock has reached that price yet. That the stock has reached that price, and at the money is where it's trading around. So usually it's like hovering around like a few numbers. So if it's trading at 100, it may be trading at 101, 102, 99, things like that. All right, so that's at the money. I'm gonna continue. Okay, so we have intrinsic and extrinsic value. Okay, so intrinsic value is determined by how far in the money the contract is. So same analogy, Apple is trading at $100, and let's say you had bought a $80 strike price. That means that you have about $20 of intrinsic value in your contract. Okay, extrinsic value is the premium of time value and volatility. So you don't have intrinsic value. Most likely these contracts are out the money and they have a little bit more time on them. Okay, so think of time value, right? You just the best thing for in options is your time. When you have a lot of time on your options, that gives you a lot more leeway if you have made a mistake or what have you. Okay, so you have time value and volatility. Volatility is basically how much the stock is able to move up and down on a day, and a monthly basis, on a weekly basis. So that is usually on your side. So you have time on your side and volatility on your side. We're gonna move on. So we got the Greeks. Has anybody been to Greece before? Yes? No? Well, these are some pictures that I took actually in Greece. Okay. And well, this is not why we're here, right? We're here for the Greeks of options. So you have delta, gamma, theta, and vega. But the two that I really want you guys to learn are delta and theta. Okay, we're gonna move on to the next slide. So delta is the change in price of the option contract as the underlying stocks move up or down. Okay, so this is basically what pays you, and it's in decimal points, right? So it's like 0.26. So let's say if you've seen a delta of 0.26, that means that you're getting paid $26 every time the contract moves up $1 or moves down $1, right? So this could also hurt you. This is what gives you money and can take away money. Okay, so you have a delta, let's say again of 0.26. Let's say Apple went up at $1 from 100 to 101. You would get paid $26 on that contract per contract. So let's say if you buy 10 contracts, right? You just now got paid $260. So this is what pays you. But if Apple was to go from 100 to 99, guess what? You just lost $26. So you have to be right, and you have to make sure that your analysis is always correct. Okay? Now we have theta. Theta is what's burning your money every day that you're holding the premium. Okay? So theta is the decay in the option price as the contract gets closer to the expiration date. Okay, so these two kind of work against each other, and sometimes they work with each other. So you just have to make sure that you're on the right side of the spectrum, and you can always print money. Okay, gonna move on. So this is an options chain. Okay, so the green is the delta. Okay, if you look on the green, there's gonna be two columns with green, right? So you have the calls on the left side, and you have the puts on the right side. I circled those in yellow. Okay, so you have calls on the left side and puts on the right side. I mean, calls on the left side, puts on the right side. So again, if you believe that the stock is gonna keep on going up, you will buy calls. So that will be on your left side. If you believe that the stock is going to go down, like currently right now, you will buy puts. That's on the right side. Okay. So we have a delta column. Remember, that's what pays you. Okay. And they range. So the purple is in the money. On the left side, we're looking on the left, right? The purple is in the money. The black on the bottom left, that's out the money contracts. And it's the opposite for the puts. So if you look on the right side, the purple is in the money and the black is out the money. Okay. The red is the theta. The red column, that is the theta. So you have theta on calls and puts. Okay. Remember, that's what's eating away at your contract. Okay. The blue column that I had highlighted is the date. That's the expiration date. So you have multiple expiration dates. This one was December 17th of 2021. Okay. And you have the strike price, which is highlighted in white. So as you see, this is the Apple options chain, and it ranged from 65 to 70, 75, and it kept on going all the way to about 240. Okay, so Apple at this time was trading at 148. Okay, so 145 was in the money. It had $3 of intrinsic value. Okay, and 150 was out the money, or you could say at the money, because it was about $2 off. But if you look at 240, that's completely of out the money, completely out the money. Okay, so that's how you got to look at this. All right, we're gonna move on. So trading stocks versus trading options. So there's a huge difference between the two. When you're trading stocks, you purchase and own the shares until you sell them. You are basically an owner of the company. And once you sell them, you are now not the owner of the company. Okay. And it's a little bit different. So let me explain. When you're trading stocks, and let's say if you bought Apple again at $100 and Apple moved up, let's say it moved up $2. Okay. You just made $2 in profit. That's amazing. That's great. Right. But with options, right? if let's say if you bought an options contract and you bought a $100 strike price, okay, you guys follow me? $100 strike price, and let's say you paid, let's say $100 for that contract, and the delta was 0.26, and it moved up that same $2. Okay, how much money did you make? Right? So you just made $52 off of a $2 move, as opposed to trading stocks where you just made only $2 on a $2 move. All right. So the difference, right, is trading options. You purchase a contract and you control the shares until you sell your contracts or until the expiration. And you also have control of 100 shares at a given time. So anytime you buy one option contract, you are controlling 100 shares of that stock. Okay, as opposed to trading options, you are only controlling one share of that stock. Okay, gonna move on to the next slide. So your trading identity. Okay, you want to know what your identity is before you trade options. Okay, and everybody has an identity. Okay, so you have the scalper. The scalper takes advantage of small gaps and tends to make trades and take profits quickly due to how fast they sell or resell a stock or option. Okay, you have a day trader. Day traders specialize in buying and selling a stock, usually within the day. Okay, and you have the swing trader. The swing trader specializes in capitalizing and capturing short or medium term gains by holding onto a stock or option for one or more days and efforts to making more profits from the price changes. Okay. And then you have the leap trader. The leap traders, it's also known as long term equity anticipation securities, are option contracts that or traders that buy option contracts that expire in like 2 to 3 years. Okay, so think of it like this. If you're the type of person that's like, hey, I want my money now, you are more so a scalper. Okay, if you are, or maybe a day trader as well. Okay, a swing trader is somebody that wants to capitalize on a nice swing, right? So maybe they may hold the contract for a few days and they want to maximize on their profits. Okay, and then somebody like a leap trader is somebody that's more conservative. They don't mind they probably don't want to look at the stocks every day, so they buy contracts that maybe expire in 2 to 3 years and they just leave it there, and they're okay with the profits that they get, and those usually return a nice big profits. So for me, I'm like a chameleon. Okay, so I am a scalper, a day trader, swing trader, and a leap trader. I'm, whatever's going to print me money, I'm there. Okay, so we're gonna move on to the next slide. All right, so we got risk tolerance. Okay, so the risk tolerance. Have you guys ever seen an elephant tightrope before? Okay, it's scary sight, right? So risk tolerance is the level of risk an investor is willing to take. So since risk tolerance is determined by your comfort level with uncertainty, you may not be aware of your appetite for loss or the risk until you're faced with that potential loss, right? So everybody's account is different, everybody's wallet is different, and everybody's risk tolerance is totally different. Okay, so like I may not be okay with losing $100, and Dane may be okay with losing $100. It may be, small for him. Everybody's different. Okay, so that's your risk tolerance. All right, we're gonna move on to the next slide. Dane, you want to take it?
Okay. So we have a few different types of risk tolerance. Okay. We have conservative, moderate, and aggressive. Okay. So conservative, you want to put your money in, all right? You don't want to take too much risk. Okay? And those are typically like, people who are near retirement or close to retirement or already retired. They want to be as conservative as possible with their money because they may be on fixed income or limited income, right? Now, moderate is the middle between conservative and aggressive, right? You may be able to take some calculated risk, at some different places, and you may want to be a little bit more conservative in other places. Right? So that's the moderate risk tolerance, and then aggressive. Aggressive is for typically reserved for younger investors and younger traders. You want to make as much money as possible. You want to be as aggressive as possible to grow your accounts and build your wealth. So those are three different types of risk tolerance.
We're gonna move on to the next slide. So your brokerage accounts, all right? Your brokerage accounts is basically the home for your money, and that's where you're going to make your trades. This is where you're going to trade your options, and so we have different brokerages accounts. Me and Dame, we like to use TD Ameritrade, Thinkorswim. It's a robust platform, but for the most part, this is where we are able to analyze the stock and make the best decisions as possible. Okay. You also have E-Trade, you have Fidelity, you have Tastyworks, you have Webull, and you have Robinhood. I know a lot of people are probably familiar with Robinhood, but we like to use Thinkorswim and the sister app, well, TD Ameritrade with the sister app Thinkorswim. All right, we're gonna move on to the next slide.
So cash versus margin accounts. Okay. So a cash account requires all transactions be made with settled cash. Right. So you're using your own cash to trade. And then you have margin account. Think of trading on credit. Okay, so the brokerages will allow you to borrow money. Okay, so a margin account allows investors or traders to borrow against the buyer securities in their account. Right, so you want to use a cash account. Right? You don't want to owe anyone. You don't want anything like that. You want to use your own cash. That's the safest way. Okay, margin accounts. If you have a lot of experience, then feel free. But we highly recommend you use a cash account. All right, we're gonna move on.
So printing money trading options is very simple. You want to buy low, sell high. So you buy low with the green, that's the first green box, and then you sell high, the next red box. Okay, and then again, you're buying low with the green box and you're selling high on the red box. Or sometimes you can even buy on the red box and sell on the green box. That's when you're buying puts. So if you're buying calls, you're going to buy on the green box and sell on the red box. Let's say if you wanted to buy puts, you're going to buy on the red box and sell on the green box. Okay, so there's multiple ways that you could trade options, and you can make money if the stock goes up or down. So you're covered either way. All right, I'm going to move on to the next slide.
Okay. So I'm sure you all want to know, how much money can I make? Okay. How much money can you make? You can make unlimited amounts of money trading options. All right. Let's move on. Okay. So before we start, we have our pre-printing checklist. Before you can print money, you want to make sure that all your boxes are checked off. Right. First, you want to check your emotions. Okay. When it comes to printing money, you want to have your emotions in check. Right? Trading is 90 to 95% psychological. And if your emotions are all over the place, it is high risk. You will lose money. Okay, so check your emotions. Next, you want to define your trading identity. Are you going to be a scalper? Are you going to be a day trader? Are you going to be a swing trader? Are you going to be a lead trader? Or are you going to be a chameleon like Solar now? Are you going to mix it up? Okay. Then you want to determine and understand your risk. Right. I personally won't take a trade unless I have a minimum 3-to-1 risk to reward ratio, meaning that for every $1 that I'm going to trade with, I want to make $3. Okay, so you want to learn. You want to learn before you earn. Learn as much as possible before you can start printing money. Right? Then you want to choose your brokerage. Go through, check out all the brokerages that are available, see which one is going to be the best tool for you to print your money. And then you want to paper trade. Okay, paper trading is trading on a demo account. So a lot of these brokerages allow you to paper trade and trade on demo accounts. So you want to make sure that you do that before you put your real money on the line. And then once you've completed that, now it's time for you to put your real money on the line. Now it's time for you to print money and start building your generational wealth. Next slide, please.
All right. So you made it to the end of this slide, okay, and the end of this presentation. These are a few testimonials and results, okay. You have people that in our group that are making, a quarter mil, $335,000, $100,000. We're just changing lives, and we want to do the same for others.
Make sure
And
you're specific. That's in a day. That's not in a year. That's in one day. Let's be specific.
Yeah. So these are just a few of them, okay? And these are people that, like I said before, that are they're changing their lives, right? Ever since they joined our group, we were able to help them. We've been grateful enough to basically make and help produce 6 or 7 figure traders, probably over 50, and we want to do the same for you guys. Okay, so I'm just gonna move on to the next slide. So if you guys want to join us, feel free to. You can scan this barcode, and it'll prompt you to our page where we basically, you could join us, and from there we'll take you along for the generational wealth building ride. All right, Dame, you got anything you want to say to the people?
No, so as my billionaire brother just said, feel free to scan that code, check out our community. Again, the goal is for everyone to build generational wealth through trading options, trading stocks, investing in real estate. We have a bunch of different generational wealth avenues. We want to make sure that we don't leave anything unturned, and we do want you guys to take this ride with us. We are making a lot of money and helping change a lot of lives by doing so as well. So feel free to come join the Money Clinic.
All right. Thank you for having us. Have a happy Juneteenth, everybody. And we will be outside tomorrow in Linden Park. So feel free to stop by our booth and we could give you more information there. All right.
All right, guys, for joining us today. And I will see you guys in the park tomorrow. You heard that, folks. Reach out. We got to change the way these things work for us. And, break these generational curses. We definitely can't. Brothers like it happen. You gentlemen have a happy Father's Day if we're dads. I in the background, and I love, love, love hearing children and babies. It just always gives me a boost of energy. These 45-year-old bones. Sometimes just hearing little babies, it just makes you feel young.
Yeah.
So,
thank you.
Guys, tomorrow.
All right. See you tomorrow. Take care.
Have a good day.
All right.